Buying your first home is one of the most exciting and yes, sometimes overwhelming milestones of your life. Today, I want to break down the 10 steps of the home buying process. This is from my own experience helping many home buyers just like yourself. Grab a notepad, cup of coffee, or whatever your choice of drink is, as I have a bit of a longer video today for you, but I promise it will be worth it as it will answer many of your questions that you might have in your mind going on right now while thinking of buying your very first home. So let's dive in. Step number 1 is plan your finances. This step lays the foundation for everything else down the road. Start by calculating your income versus your expenses and see how much you can realistically allocate each month for housing costs. So here are some of the factors that are included in step number 1. First comes the down payment. This can range anywhere from 0% to 20%. However, in the industry, the standard rule is to save 5% of the home's price for homes under 500,000 and 10 to 20% of the home price above that. Now, of course, the higher the down payment, the better off you are in terms of your monthly payment, more money going towards your principal every month instead of just paying the interest. But of course, we understand that not everyone has that chunky down payment available and ready to go, and that should not discourage you. So aim to go for at least 5% down. Now, where you can save this money, use a dedicated savings account like your first time home savings account, FHSA, where your savings grow tax-free. You also have government help that you can leverage, programs such as the Home Buyers Plan to withdraw up to $60,000 from your RRSP account, which has gone up from $35,000 to $60,000 from your RRSP without penalties. And if you are buying with a partner who is also a first-time home buyer, that withdrawal doubles to maximum of $120,000. Just keep in mind that money has to be in your RRSP account for at least 90 days before you start using it. Start early and automate your savings to make it easier to hit your goal. Then we have closing costs. Now this is completely 100% your responsibility and you will have to pay out of your pocket for as a home buyer, and it's rarely ever negotiated with the seller. Now this closing cost will include expenses such as your lawyer fee, your title search, your land transfer tax. Now this money should be available sitting in your bank account. I recommend saving 2 to 3% of the purchase price. So in total, aim for 7 to 10% of minimum savings. When it comes to your income, the lenders like to see consistency and stability in your income. So it is important that there are no huge gaps in your employment in the last 2 years and your resume shows that you have 2 years of employment. Now that does not mean that you have to stick around in one place for 2 years, of course, but as long as there's a stable income coming in for the past 2 years, that's what matters the most. So a lot of times people do not factor these expenses in, and I would like to mention this to you because becoming a homeowner does involve other expenses. So this will include your monthly expenses such as paying taxes, your utilities, your maintenance. So make sure that you do not stretch yourself too thin and you have some money set aside in your savings account for any unexpected expenses that might show up later down the road. Step number 2 is credit score. In terms of credit score, a great benchmark to aim for is 680 or higher. It's most likely to be considered a good credit score in lenders' eyes. Just keep in mind, if your credit score is lower, and that goes for your spouse, friend, partner, whoever you're co-signing the loan with, your lender may end up charging you extra fees. The interest rate might be higher, or you might be required to pay a higher down payment than the usual. So I would say if anyone who is trying to set themselves for ultimate success when it comes to buying a home, you should aim for 740 plus credit score. If you're not there, don't worry, don't need to panic. You can improve your credit score by paying your bills on time, reducing your debt, and avoid opening up any new credit cards right before applying for a mortgage. Trust me, a strong credit score can save you thousands of dollars over the life of your loan. Step number 3 is partner with a great real estate agent. Having a great real estate agent by your side is your secret weapon for this process to go as smooth as possible. And here's some of the ways they can help you. Number 1, local expertise. They know the market, neighborhoods, they know the market trends, what the market is doing. Number 2, they can help you with negotiation skills. They'll fight for the best deal for you. Number 3 is streamlining the process. From finding homes to handling paperwork, they guide you every step of the way from the beginning till the end. Number Number 4 is offer price, which is really important. Many buyers don't know what price to offer when they are interested in a home and they want to move forward with it. So your real estate agent will do the numbers for you. They will look at what recently has been selling in the area, how the market is in that particular neighborhood, if it's going up, going down, and based on all those facts and numbers, they can help you and guide you to determine what's the best price and the right price for the home that you're interested in. So it's very important that you look for a real estate agent who understands your needs, who communicates clearly with you, and has the experience in the preferred area. Step number 4 is get pre-approved for a mortgage. A mortgage pre-approval is a written confirmation from a lender that they are willing to lend you a specific amount. And it is crucial for 2 reasons. Number 1, it sets your budget. You know exactly how much you can borrow. Number 2, it signals your seriousness. Sellers will take your offer more seriously when you are pre-approved. Since you have now hired a real estate agent, reach out to them and ask them to connect you with someone. Most real estate agents have their go-to mortgage brokers or a bank that they work with and trust. Remember, real estate agents cannot receive any kickbacks from referring a mortgage broker. So if they're referring you someone, it is purely because they know them, trust them, and like them. I know I always refer to my mortgage broker who I've been working with for many years now, not because she gives me anything, but it is because I know she's excellent at what she does. She's reliable and she's always there to answer any questions at any time of the day. Number 3, you have options. You can either go to a mortgage broker who will shop around on your behalf to find the best rates, to find which lender will best suit you, and find the best loan terms for you as well. Or you can do the job yourself and shop around by visiting different local banks, credit unions. Whatever you do, the key over here is shop around and you do not settle for the very first person that you talk to. Typically, lenders will like to see the following documents. Number 1 is recent pay stubs and tax returns. Number 2 is proof of savings for the down payment. Number 3 is your IT and proof of employment. Once you've decided which mortgage broker or lender you would like to work with, keep in mind that they will pull your credit score, as it is important for them to know your accurate credit score before they move forward with your application. Step number 5 is define your needs and your wants. Once you're pre-approved and know exactly what your budget is, it is time for making a shopping list, which is the fun part. It is very important that before you start house hunting, you sit down with your family or whoever you're buying your home with, or by yourself, and map out what exactly it is that you're looking for in your very first home. Ask yourself what are non-negotiables. For example, number of bedrooms, school district, commute time, and then ask yourself what are some of the things that are nice to have. Maybe a bigger backyard, finished basement. Are you planning for a growing family, or you're working from home? Be realistic about your budget, but keep an open mind. Your real estate agent can help you refine the list as you start seeing properties, because when you're buying a home, it is a process of elimination. And believe it or not, your list, that whatever you make, the initial list, can change down the road as you start seeing the properties and you know some of the things that you do not want, and you will have to refine your search as you go. Step number 6 is start your home search. This is where things start getting exciting. Use online platforms like Realtor.ca to browse listings and schedule your viewings with your real estate agent. Your real estate agent will also be able to help set up searches in their MLS system. So as soon as new properties come to the market, the system notifies you in real time. So when you're out there doing your home search, keep these tips in mind. Number 1, visit homes that fit your budget and your priorities. So remember, the list that you made early on will definitely come handy when you are going and booking these viewings. Number 2, be prepared to act quickly, especially in hot markets. Number 3, take notes and photos during viewings to compare later. I always ask my clients to rate properties as we are going forward. Sometimes you are viewing 6, 7, 10 properties in a day. If you like them, 10 being the one that you fell in love with, 1 being not so much. And that can help you when you are going back to your home, talking and discussing among yourselves to really think how those properties resonated with you when you were there. Now, buying is a process of elimination, as I said to you before. It can take time, but patience pays off. While you're out in the field looking at homes, think about the things you did not like in some homes and refine your search as you move forward. Step number 7 is make an offer. Found that perfect home for yourself? Well, it's time to make an offer now. My first advice, don't wait too long. If you like the home and you want to make an offer, go for it. It is likely that there are multiple buyers who are interested in that home. Even if you are in a slower market, at least one other buyer might be in competition with you. So you can come up with an offer price based on the market trends and the home's condition. As I did mention earlier before as well, your real estate agent can help you with that price. It's ultimately is going to be your decision, of course. What I usually do, I do my calculations in a spreadsheet where I give my clients a range starting from low, medium, and high price. This range is based on hard facts, such as incorporating if the average prices in the area have gone up or down, the assessed value of the comparable home. So we are picking the right homes to compare with the subject property that you are interested in that recently sold in the area, how those homes compare to the subject property you're interested in. Now, when you have this range based on hard facts and numbers, this helps you knowing if you are going to put a number that is higher than the highest value on that spectrum, on that spreadsheet in this case of bidding wars, let's say, you are aware of it and you're willing to put above the market value so you can get that home in that competition because you really love it and you want that home. But at least you are not shooting in the dark and you have some numbers to back it up. And this can come really handy when I will talk more about in the later step about appraisals. With the offer comes conditions. So some of the common ones to include are financing condition, your home inspection conditions, and sometimes also a review of condo documents like status certificate. Now, typical days for the conditions are anywhere from 7 to 10 days in a normal market, of course. In some cases, it could be longer, something you can always negotiate, or shorter, of course, to make your offer attractive. Once you submit your offer, then seller has 3 options to get back to you. Number 1 is that they either accept your offer, number 2 is that they reject your offer, and number 3 that they do counter offer. You as a buyer putting an offer can decide how much time you want to give the seller to make that decision, which is known as an irrevocable time. Again, these are some of the little details that your real estate agent can really help you decide, and you don't have to do it alone. So let's say once your conditions are done, your offer is ready to go, you have submitted it, and your seller on the other hand accepts your offer, then it's time to put a deposit. Once the offer accepted, you have 24 offers from that day to make a deposit, which is 5%. This could be higher, this could be lower, but typical it is 5%. One thing I would like to say over here is that starting from conditions, the offer price, the irrevocable time, the deposit, everything on the table is negotiable. So don't be afraid to go ahead and discuss that, whatever is on your mind, with your real estate agent, and let them know, communicate with them in the beginning stages, so down the road when the offer accepted, you don't regret anything. Step number 8 is due diligence period and negotiations. So if your offer was accepted by the seller right off the bat, or let's say if you were able to negotiate the terms and have come to an agreement and your offer was accepted, now you can move forward to step number 8, which is the due diligence period and negotiations. It is during this due diligence period that you actually get to do your home inspection, where the inspector will come in and take a look at the home. It is a cost that you have to pay out of your pocket on the day of the home inspection. That can range anywhere from $250, can go as high to $600 or more sometimes, depending on the size of the home. The bigger the square footage, the higher the cost of the home inspection would be. So the home inspector does an inspection of the house in very much detail and then prepares a report for you, so you have something on paper to look back to. So what they do is they will do the inspection of the entire home. They will check the crawl space, the attic, the roof. Of course, there are certain limitations that come with the home inspection, such as they cannot tell what's behind the walls of a finished basement, so it will never be 100%. Just keep that in mind. The home inspection is just there to give you an overall picture of the home's condition and health, and prepares you what some of the costs might be coming up, or some of the things in the home that might need your immediate attention, or maybe 5 years down the road you need to fix them, or 10 years down the road that you need to fix them. However it is, it just gives you an idea how to prepare yourself and budget yourself for the upcoming costs and expenses that might show up. So the goal over here from doing the home inspection is not to look for problems, but to get yourself aware of what the health of the home looks like. Another thing that I would like to bring your attention to is that home inspectors are more of generalists. They are not specialists. They're not someone who specializes in roofing or HVAC technicians. So if you're someone who is looking for that second opinion when it comes to these certain things, you can definitely get someone to come in who specializes in it and get a second opinion. It's totally up to you. You can do all of those things during this due diligence period. Now, there are other testings that can also be done during this time frame, such as mold testing, air quality testing, whatever you see fit, you can schedule that during this time period as well. This is also the time where you get to financing firmed up. Now, many buyers also put the financing condition in because even though you got your pre-approval done beforehand, many lenders might want to see an agreement of purchase and sale to finalize the loan for you. Now, this due diligence time frame can be anywhere from 7 to 10 business days, but in the hot market, it can be reduced to 2 to 3 business days or simply straight up a firm offer. I hope we never end up going there where we had no condition period and we had to put in a firm offer to win the bidding wars, because I feel this due diligence time frame is so important for the buyers because it is one of the biggest assets you're going to buy and you are getting a big loan for it. So I think it only makes sense for you to do this due diligence, right? Additionally, this is also the time where you would want to get home insurance quotes. It is important that you have that in order to protect your investment, and also because the lenders would want to see that before your closing. So once you have done your due diligence, all the inspection is done, your testing is done, you can then, based on these findings, negotiate the cost of repairs with the home sellers. Now, unless you bought the home as is, where you wrote down in the contract that I am buying the home in the condition that it is in, the buyer has the ability to negotiate these costs. Either you ask the seller to repair those for you, or you will ask them to adjust the cost of those repairs in the purchase price. Everything in that home has to be in the working condition, and if it is not, you can of course negotiate that. So once you propose the negotiations and the price adjustments to the sellers, again, they have 3 options. They can either accept that, they can either reject it, or they can either counter offer the cost of those repairs that they found out through hiring their own professional contractors to come in and give them a quote. Whatever it is, you have to negotiate. Both parties have to agree on the terms of the cost and the repairs. And then once that's done, we can move forward. The offer becomes firm and we go to our next step. So step number 9 is the appraisal. Now, the appraisal will be ordered by the bank, and it is there to protect the bank, basically, not you. So it is not necessarily there to make a good determination of the actual market value of the home that you're interested in buying. So what happens is that the lender will send out an appraiser to give them the appraiser's opinion of the value of your home. As it is to protect the lender will not give you more money than what they deemed through the appraiser the actual value of the home. So just know that this appraisal can come out in 3 different ways. Number 1, appraisal comes at the sales price. You're paying $700,000 for the home, the appraisal comes at $700,000, you're good to go. Number 2 is that appraisal comes over the sale price, which means it comes back at value higher than what you agreed to pay for the home in the contract. This is great, which means you potentially can have a little bit of built-in equity to begin with in your home. And you may be able to negotiate with your lender for some extra coverage for those closing costs. Number 3 is that appraisal comes below the sale price, which means it comes to be under value of the sale price that you're under contract for. Now, in this case, it means that you may have to do a little bit of renegotiating on your contract with the seller. You can also request a second appraisal. That happens many times in the past. It has happened to my clients, and your real estate agent can help provide some comparables that were sold in the area to the lender and their appraiser. If you remember, I did mention to you in step number 7 regarding price range based on the assessed value. That comes in very handy over here because most appraisers do base their comparables that they use on the assessed value that recently sold in the area. So knowing those facts and numbers and based your price offer on that can definitely help you in this appraisal stage. After all those steps from number 1 to number 9, if everything has gone smoothly, we now approach our very final step, which is the closing. If you have successfully made through all the steps of home inspection, financing, appraisal, and your offer is now firmed up and good to go, you have now moved to the closing stage, which is great. Usually you end up getting 2 buyers visit that are included. Again, you can negotiate that to be 3 buyers visit if you like. What I've seen standard is 2 visits are sufficient and enough for buyers. A lot of buyers use their first visit to do the measurements, or they bring in their family to show off their home. And the second visit is usually used as a final walkthrough. So the second buyer's visit is known as a final walkthrough, which is very important stage in the closing process, because you want to make sure when you're doing the final walkthrough, everything is in the same condition as you saw the home and you put an offer and you purchased it. Everything is in working condition. And if it is, you're good to go, then you go ahead and let the lawyers know, your real estate agent know. The lawyer will give you a call on the day of closing. They will call you to their office, sign up some paperwork that needs to be done, move the funds. They're the ones who take care of those things. And they will let you know when everything is done, when the funds have been transferred, all the conditions have been met, everything is good to go. They will give you a call and tell you that you are now ready to go ahead and pick up your key, which is great. Before, what used to happen is that a lot of buyers will go to the lawyer's office to pick up the key. Now you can simply go and they will give you the code for the lockbox and you pick up the key from there, and now you are a homeowner. However, there is an alternative that can happen at the closing stage that you need to be aware of. Let's say you go to the final walkthrough and there are certain issues that come up, or something is not working. Then in that case, you can notify the lawyer, and they are the ones who will get in touch with the seller's lawyer and let them know that some of the things need to be fixed before the closing. If they're not, then they can hold some of the funds until those things are fixed for you. Again, there's some negotiations that happen over there, so that's an alternative as well. All in all, if everything is well, you are now officially a homeowner to your very first home. Congratulations if you have made it through this whole video and watched all the steps. I really hope and wish that this video was helpful for you and you were able to learn something. If you have any questions, feel free to reach out to me. If you are someone who's thinking of moving forward and you are getting ready to buy your first home, you can simply book an appointment, just a consultation, to know how this process can look like for you. My information is all in the description below. Until next time, have yourself a wonderful day. This is Faryal signing out.